Hi, welcome to my channel. In today's low rate environment, it is a lot harder to find a stable, high yield, income generating investment, especially for retirees or people who are just looking for a steady cash flow. While there are a lot of REITs that's producing very high yield dividend, as we've seen recently, a lot of them has also been cutting or eliminating dividends due to the pandemic. Today in this video, I want to introduce you to a REIT that not only it's paying around 67% of dividend yield, also its dividend is paid out on a monthly basis. It's a stock that I think is worth consideration for people who are looking for a monthly income. So this stock, or more precisely a REIT, which stands for Real Estate Income Trust, is called the Northwest Healthcare Properties. It has the stock symbol of NWH.UN, or you could also search for NWHUF if your stockbroker doesn't show up the NWH.UN. So Northwest Healthcare Properties is a Canadian company and it does pay out its dividend in Canadian dollar. If you are a US investor, the dividends that you get will be deducted by 15% by the Canadian government upon payout. However, when you do your taxes, those deductions can be claimed back as credit, so you don't actually lose out on those dividends. One of the big plus about this REIT is that its dividend is paid out every single month, so you get steady cash flow on a monthly basis. Using its stock price of the past recent 2 months, depending on where you get in, you're looking at a dividend yield of roughly 6 to 7%. And if you utilize the dividend reinvestment plan, which repurchases stock every month you get a dividend, what that means is on your next month, you're going to get a little bit more payout, making your total overall annual dividend yield slightly higher than what's actually showing. So I think a 67% of dividend yield that gets paid out monthly is pretty good in the current low yield environment. But more importantly, the asset this company owns makes it a swan stock that you don't have to worry when the stock market is volatile. So Northwest Healthcare Property is basically the landlord of a lot of the hospitals, healthcare facilities, and medical office buildings across the globe. Its properties are in Canada, Australia, New Zealand, Netherlands, Germany, UK, and Brazil. And this is really what makes this company stable, regardless of how the pandemic plays out, regardless of how the vaccine plays out, whether there's more lockdown or not, whether their economy recovers slow or fast, it doesn't really impact the company because no matter in what situation, the hospitals will remain open. People will go to the hospital. So Northwest Healthcare Properties owns roughly 190 rental properties, around 15.4 million of square feet. And they have long-term rental agreement with their tenant. The weighted average lease term is about 14.5 years. And because their tenants are in the medical field, especially in the cure sector, 80% of their tenants are government-backed or government-supported, making them very, very stable. They currently have a dividend payout ratio of 87%, considering that their tenants are fairly safe and they will never be shut down due to whatever government lockdown. This payout ratio is pretty safe in my opinion. Even though earlier this year, the stock price of this Northwest Healthcare Properties also tanked due to the market crash along with everyone else, the stock price very quickly recovered in comparison to most of the other REITs because people know the hospital are going to remain open. So if you own the stock, you don't really have to panic even when its stock price drops. And it's actually a good opportunity for you to accumulate more share. If we look at stock chart of the past 5 years, even though this year, due to the big drop and recover, there's pretty much zero price appreciation. But along the past 5 years, we're still looking at a roughly 9% of annual stock price appreciation. Combining with an average of 7% dividend yield, we're looking at an annual total gain of roughly 16%. It's not bad for a stock that you don't have to worry about. So in conclusion, it's not a stock that you can expect super high returns like you would in the tech sector, but as a stock that you can sleep well at night and just collect stable monthly cash flow, I think it's worth a second look for people who are looking to build a steady income stream or a defensive sector in their stock portfolio. Please feel free to leave any comment or questions down below. And if you like the video, please help me out by clicking the like button and don't forget to click the subscribe button as well. I'll see you next time. Bye bye.